Hello everybody and welcome to Xero User Hour today. My name is Jerry Murphy. Just getting everything organized at this end for you. I can see a lot of people logging in there and joining me. So let me just write in the chat box so you guys can see where it all pops up. Alrighty, just in the chat box, I've entered in a little chat there saying hello and welcome to Xero User Hour. Please tell me your name and where you are from if you find the chat box there, and if you want to. If you don't, that's fine, let me tell you. Oh, hello from Brisbane. Hi Andrew, thank you. As I said, my name is Jerry Murphy and I run Xero User Hour here for XU Magazine in Australia and New Zealand, for Australian and New Zealand users and Xero advisors, of course. For those of you that don't know me, prior to today, I've been trading on Xero for a number of years. I'm a qualified accountant and I'm now a cloud integrator as well. I provide, I'm the founder or co-founder of whichaddon.com, which is lots of people joining us from Queensland today. I'm not so warm up in sunny Queensland. I'm sitting in cold Sydney today, as always, but I'm based down in Sydney. So yes, today, if you have any questions about Xero, anything at all that you might be struggling with Xero that you want to know more about, or even about some of the add-ons, that's what Xero User Hour is all about. It's hosted by and brought to you by XU Magazine, which is the magazine for Xero users by Xero users, where you can get a free subscription to a digital or print version of their magazine. There's over 100 pages or so per edition, all news about the Xero community, Xero industry, add-ons, advice for advisors, all sorts of things. So without further ado, let's get into our Xero User Hour today. Last week, we went through some Xero tips and tricks. Sorry, not last week. Week before last, we were supposed to go through some Xero tips and tricks, but I was unwell, so we didn't end up running that Xero User Hour. And last week, we did go through some Xero tips and tricks, but it was focused on those Xero lessons that were shared in issue 7 of XU Magazine in issue 7. So what I wanted to do today, given that we are a day off of end of financial year here in Australia, I wanted to really just take you through some tips and tricks around Xero, but also make this session a lot about how to run our end of financial year in Xero. Now, for those accountants that are on the line, it's not about how to run end of year financial reports like financial statements and using report packs and all those other things. We can run that another day if that's something you're very interested in. But because we get a number of Xero users here as well and watching the recording that we put up on YouTube later, it's important for me to make sure we go over the important things that we need to cover and the types of things that we're going to do or the types of things you need to look for and manage in your Xero file before you give it to your accountant at the end of the financial year. So if you've got bookkeepers on the line as well, these are the types of things that you might already know how to do as a bookkeeper, but if you're not familiar with Xero, you might not have actually done it in Xero before. So, excellent. I've got a comment here saying it's freezing in Brisbane, and I'm sure Alistair will tell me how the weather is. There's about a 20 to 30 second delay between what I say and when you hear it. So if I ever take a little while to respond to a comment or a question, it's just because there's a bit of a time lag. So if you're just joining now, for those of you that have just joined, excellent. We've got Jill from New Zealand. Very cool. I'll let you all keep entering in the chat where you are joining me from today and how you're doing. And as I just mentioned, any question that you have about Xero or the add-ons, put it to me, and if I can answer it, I will. If not, I'm sure I'll know someone who can answer it, or I can work it out for you. So this Xero User Hour is going to be about reviewing the Xero file for end of financial year and any other Xero tips and tricks that we have to learn along the way. But any questions that you have around Xero or the add-on ecosystem, now's the place to, here's the place to ask. All right, so let me just switch over my screens now so you can see my screen. You've just been hopefully seeing me and get to know who I am, and you should now just be able to see the full Xero screen. Just going to zoom in a bit there for you. All right. So we're using the Xero demo company here just to go over some of the basics of what we would do for a year end in Xero. Now, I had a look around some different sources of what people would generally do, or what Xero suggests you should do, and not all of those things I particularly agree with or in order. So I'm going to do my own version of what I do in year end, and also help those people that understand, that are watching, that aren't accountants and bookkeepers, why we even do what we do at the end of financial year, and what we're looking for as accountants. So I'm not an accountant anymore, but as in I'm not a practicing accountant anymore, but as an accountant, what we do and what we're looking for and why we ask the questions that we ask, so you can go through that process and prepare everything as best as possible for your accountant. Okay, so the very first thing, and I know if you've watched a few other Xero user hours with me, you would understand and know that it's very important to me that your statement balance of all of your bank accounts in your Xero file is 100% correct, and that this amount here that you have for your bank balances is the same as the amount that was actually in the bank account as at the date listed here to the left. Because what's happening is every time you have transactions come through your Xero bank feed, or if you don't have bank feeds, if you're joining from other areas and other countries that have global versions of Xero that don't have bank feeds yet, whenever you import your bank transactions in, you know that your statement is that your Xero file has all of the correct files in it, because the amount of because the money here is equal to the amount of money that's actually in the bank account as at the date that's listed here. Because as the bank feed comes in or the transactions are imported in, then it means that all of the transactions are in there if that amount is correct here and it matches what your running balance on your actual statement is. Now, if they're in here and there's a difference between your statement balance and your balance in Xero, that means that you likely have a number of transactions that need to be reconciled. So if you reconcile these transactions, there shouldn't be a difference. In some cases, if you're still writing checks or if you've got an undeposited fund, there might be a difference, but you'll know what that difference is. But the difference between these two numbers here is generally the fact that you have to reconcile some transactions. So number one thing before you bother even going and reconciling the transactions in a lot of cases is that a lot of people just reconcile and go, yay, I've got everything reconciled, but that statement balance seems to be out and it's never been right. Well, that's not okay. That if that statement balance is right, if everything is reconciled, if you understand why there's any unreconciled transactions sitting in the background causing a difference between your statement balance and your balance in Xero, then that's okay. All those transactions are in there and that's what you need to be doing. So number one thing, when at end of financial year, before you even look at sending anything off to your accountant or telling them to log in and have a look, check you've got those bank statement the statement balances right for each of your bank accounts, for your credit cards, and any of the accounts that are going to show up here on the left hand side of your Xero file. Personally, I do manage my Xero file every morning, 5 minutes every morning, and that's you reconcile your bank account, you look at your invoices, you chase outstanding debtors, you enter any bills that need to be entered in, and look at your P&L, look at your balance sheet, and off you go. That's my ritual at 5 minutes every single morning in Xero to check where everything's up to. And if it's not yours, I suggest it should be, because that's what you've got, the ability to know exactly what's going on in your business at any time with Xero from a financial point of view. And the more you do it, the more you get comfortable with understanding the numbers that are there and what it's telling you, then you've got a better understanding of exactly where your business is at and you can make the right decisions. All right, so number one thing, to get this statement balance right for your bank accounts, and that's your number one thing that you need to do to check at the end of financial year. The next thing I will always do is go into the invoices section. So over here, we've got invoices owed to you. You can also go to accounts and sales to go to the same area. Now, if I was looking at this at the end of financial year as your accountant, the first thing I would do is go and have a look in my awaiting payment sales invoices. These are the sales invoices that are due for payment now and awaiting payment from customers. These are the two statuses of invoices, draft and awaiting approval. We'll come back to later. But the awaiting payment invoices here, these are the ones that we've told our Xero system that the invoices have to have been this is money that we're waiting to be paid for by our customers. Now, if they're recent invoices and they haven't been paid, then that's most likely all well and good, especially if they're not past their due date. I wouldn't even consider looking too much further at those invoices because they're only recently issued and it's still within the due date requirements. Now, these first two invoices though, when I first look at that, what I can see is I see Bayside Club and Marine Systems. It looks as though these two invoices haven't been sent. So they've been created inside Xero, but they haven't been sent according to the system here. So if I open up the invoice and scroll down, I've got my history and notes, and I can see that this show history, and I can see that this invoice was approved, created, and edited all by me today at these different times. So that's what's happened. But if it hasn't seemed to have been sent, now when you go and send an invoice, you either email it by hitting this email button, and this is the email address here and all the details of the email template, etc. And when you do that, let me just email it to myself so it actually works. When you do that, Xero is going to record the history of who you sent it to, when it was sent, and the email address. So just looking down in the history down the bottom here, I can see that the invoice was sent at 1:13 p.m. and the invoice has been sent to this email address. So I can see that history is there. The other thing that happens when I do that is the invoice gets marked as sent, which means that when I look back at the invoices, I can see that it says sent here. This one still hasn't been sent. So we'll send that now, and we'll do that in a different way so you can see. But that was the first thing I noticed. These invoices might be new and awaiting payment, but if they haven't actually been sent, of course, we might need to send them to the client in order for them to pay them. If there's another excuse as to why they haven't been sent and they've maybe been physically printed, someone just forgot to mark them as sent, whatever it might be. But that was the first thing that pops up to me as something that I would need to have a look at. All right, let's open this Marine Systems invoice. We know it hasn't been sent because in the history it's going to say that it hasn't been sent because it's just got it. I can tell it would have been if it was sent. I'd have a thing saying that it was sent. I would see an email showing that it's sent, but it hasn't been sent. So if I select print PDF this time, this is what you would do if you're printing off a paper copy of the invoice, maybe to send it off to the customer or hand it to them, and it says, would you like to mark this invoice as sent? If I leave as is, it's going to not mark it as sent. It's just going to leave it blank and I won't know whether it's been sent as not. But if I'm definitely going to be sending it, giving it to the customer, then I hit mark as sent. Then I can print the PDF when it comes up, print the PDF, physically print it, or email it off by attaching it to another email if I had other information I had to send. And there we go. So that's the invoice itself. That is the two invoices that I saw that were recently created that hadn't been sent yet. If we look in here, we can now see that those two recent invoices have been sent. And if we have a look in the history, we can see how and why. Or how and when, sorry, not how and why. How they were sent and when they were sent. And who did it. You can't see why they did it, but I figure the reason why you did it is trying to get paid. Okay, so here further down, I might look at these, and I'm looking here, I can see these different invoices. We covered this briefly last week when we were talking about tidying up the Xero file. Here's this credit note that always pops up in our demo company. If I was tidying this up at end of financial year, if this credit applied to this invoice or this invoice, I would apply this credit note to the invoice. Let's just quickly do that. And then we'll talk about the one final thing I would look at in relation to these outstanding invoices. Okay, so now I've just got the 9 awaiting payment invoices. That credit note's been applied to that invoice here. And it's only owing $189.50. Now this is quite an old invoice here, not too old, but 7th of April, 27th of April. These two old ones here, I would be questioning those as I'll tell you this, is looking at this as the accountant looking at this file. If I was looking at this file on behalf of a client, I would ask the question and say, well, what's happening with these city limousine invoices? Do they still owe you the money? Does this invoice need to be fully credited? Did something go wrong? Is it a bad debt? And this is only on invoices that are a couple of months old. If you have a number of invoices that are a couple of months old, I probably wouldn't raise it. But if you had a lot of really older invoices, just generally when invoices look like they should have been paid by now, because they're now 47 days and 73 days overdue, as an accountant, I want to make sure that your end of financial year statements for your company or your business are going to reflect exactly what's going on in the true financial position of your business at the end of the financial year. Now, you might, as a business owner, look at this and go, well, it's just my invoices. When we look at our accounts receivable on the balance sheet later, you're going to understand how the total number of everything that adds together on our balance sheet actually affects what happens in our business later on. The decisions that can be made on behalf of our business in relation to getting finance, in relation to other things you might be wanting to do. So this isn't an accounting function, but the reason why accountants do what they do is to make sure that we're reflecting the right information and giving a true and accurate reflection of what's going on in your business at any point in time. So it's the true financial position. So correct decisions can be made based on that. So these two invoices here, if they were bad debts, and I would question and say, well, are these bad debts? If not, chase this person for payment, get the payment from them obviously as soon as you can, and then mark the payment against that. I know now that with all of these invoices here, if we look up the top, even without running an aged receivables report, I know that your accounts receivable is $16,006.55, and that's what your accounts receivable would be recorded as at the end of the financial year. Given that you've got a day's worth of invoices left, you obviously might have some more, but that's the number here. I want to know that $16,000 is valid. All those accounts will be received in the new financial year, and they reflect accurate invoices that are awaiting payment. All right, so we've checked our bank account, we've checked our accounts receivable. Let's now have a quick look at what else we would look at our accounts receivable. I would look here at the awaiting approval and the draft invoices. Just check into each of those, what's going on with these invoices. Should they have been approved and be sitting in a waiting payment? Should they be deleted because they're old and someone's just left it there and it was created another way? Whatever it is, now's the time to clean up those files and make sure that those things everything is there because it should be. And if you know why it's there, then that's fine, leave it there. If it's not there for any particular reason, then clean it up and delete it out. Now, end of financial year is the time to get all those things sorted. All right, so that is our accounts receivable. Let's look at the accounts payable. So if we look down here at accounts payable, we can hit bills you need to pay and it'll take us to the purchases section, or you could select accounts and then purchases. Now again, as your accountant here, what I'm trying to verify is what is going on with your accounts payable. Are all these accounts actually payable? Are these expenses truly just bills that need to be paid and that they haven't been paid some other way and you've forgotten to update Xero? Common reasons why your accounts receivable might be wrong is you've entered in a bill, and then when you've paid the bill, you didn't match the payment to the bill. You coded the payment straight to the expense. So let's say you've got a Telstra bill, you enter in the Telstra bill, $500. Then it sits here as a payable bill of $500. Then you go and pay the bill for $500 to Telstra. And when it shows up on your bank statement, instead of matching it to the bill here, that's sitting here waiting to be paid, you just code it straight to telephone. And that means you end up with telephone expense twice, and you have an unpaid bill sitting here as unpaid when it's actually been paid. Now, one of the ways you work that out is by looking here at the outstanding bills. There's two other ways that I work that out for people. If I look at these outstanding bills and it looks okay, the other way that I might pick it up is that I'll look at your telephone expenses, which I'm going to show you how to do when we review the profit and loss. I'd look at your telephone expenses and I would see two bills for $500, and that telephone bill that month looks a bit high, and I'd review why it looks high, and that's because I have two bills of $500. That's another way that I pick things up. The third way that I might pick something up is that you've actually marked the bill as paid in here, but then you've still put the payment of the bill to the telephone expense. That means in the back of the bank account, you have a record saying, I paid this bill from this account. And then you have another record for the same account saying, I paid $500 for telephone from this account. So you end up with two different places. So if you are someone that knows you've been entering in bills, like in here, and then you've been going into your coding and you haven't been matching them in the bank reconciliation to this list here, then it means that you might have a little bit of a problem. So if that's you, you need to look at this list very carefully and work out whether you've actually been marking the bills as paid. If you know that you have paid the bill and it's already been recorded and you can see it in your profit and loss as an expense that's already been paid, or you know that you marked it as reconciled and you just put it to telephone, for example, then you can remove these bills. You need to make sure that this list here of bills, whether it's 11 bills like this one or 200 bills, you make sure that this awaiting payment list is exactly what is awaiting payment as at the end of the financial year. Make sure that it's valid, make sure that it's correct, because that's what you have to do, and that's what your accountant is going to ask you to do as well. If your accountants aren't asking these types of questions and checking these things for you, that's what their job is, and they should be. So make sure that you do it yourself, and that you ensure that happens as well, to make sure that your information is true and correct. All right, so looking at those bills here, the only real thing, there's no credit notes to look at. The only real thing I'd probably look at is some of these older bills. I would check whether the payment, all the payments had been applied to these bills correctly, or if that bill really was correct. If I wasn't sure, if I couldn't remember what it was that I owed these particular people, I would be requesting their statements or requesting from them the how much you owe them, and then if the statements they send you match up the amounts that you owe them, then that's how you know that it is accurate. Now, one thing that we didn't do prior to looking at these accounts receivable and these bills is we didn't actually reconcile the bank account. We talked about reconciling the bank account before, but just one thing, for example, and I'll show you the importance here, is if I go into my bank account now and I reconcile these 28 items, it's very likely that I'm going to find a payment to one of those bills that I just saw that is still marked as unpaid. So if I just scroll down here, I know it's on one of these pages, or it might not be in this file. Let me just have a quick look. There's only 3 pages, so just have a quick look. I'm just looking for a payment to central copiers to see if there's a payment here for central copiers. I know there is when we upload a bank file, but I don't know that there is when you've just got the file without it. No, it doesn't look like it. Okay, so I can't show you the bank matching off the payment to central copiers, but I can show you here. We've got Truxton Property Management. Let's see if that bill was on there. I'm not sure if it's still showing as unpaid. Let's have a quick look. And I just want to show you how doing the bank reconciliation prior to checking your accounts receivable and accounts payable is obviously going to save you time, because if you don't, then I can do this smart agency one, because both these bills have actually been paid. So let's do that one. We've got here $4,500. So when I look at my bills at the moment, it looks like I've got $8,507.78 owing. But when I reconcile and I say, well, actually on the 23rd, I paid these 2 smart agency bills, then I can see that my bills list has just reduced quite dramatically, and I actually only owe $4,000 because I've matched off those payments. So there may be more than that that you might have to go through, and until you reconcile your bank account, you don't know. But we're not going to go through the process of reconciling everything, mostly because not everything in the demo file actually links back to something. But if we go through the process of applying all our payments first, checking that the statement balance is right, and then we review these accounts receivable and accounts payable in detail prior to sending off not sending off your file, you don't do that with Xero, but prior to your accountant having a look in here, then you're already answering the questions for yourself as to the accuracy of your accounts receivable and accounts payable, which is something your accountant should be looking at to ensure that it's correct. And if you know that it's right at the time, then you can send it off to them, or tell them that it's all ready to look at and ready to go, because you've done that process for them. Of course, as with accounts receivable, you look at your awaiting approval in your drafts and work out why they're there, if they should be there, if they should be moved in awaiting payment, whatever it might be, and maybe even look through your mail and see if you've got any other bills, or your email to see if you've got any other bills that you haven't entered in yet, to really make sure that your Xero file has a true and accurate reflection of what it is that your company owes or your business owes at that point in time. All right, just checking if there is any questions for those of you that have been joining along whilst I'm talking. This is Xero User Hour, and we're going over the things that you should be doing at the end of financial year to get your Xero file prepared for your accountant. And for those accountants and bookkeepers watching, for those of you that have been using Xero for a while, I'm sure you know how to do what I'm showing you now. If you don't, then you're only new to Xero, then hopefully you'll learn through the process of how it is that we do what we do inside Xero at end of financial year, which you might know how to do in other systems but not know how to do in Xero yet. The other thing is, Xero User Hour is all about Xero and the add-ons that connect to Xero. So if you have any question in relation to Xero that you need answered, or to the add-ons, please feel free to enter the question in the chat box, ask me the question, and if I can answer it, I will. If I can't, I will get the answer to you as soon as I can, or work it out as we go. So feel free to send those through at any time. All right, now we're back on the dashboard. We've had a look at our bank accounts. We've had a look at our invoices and our bills. Let's go down to the bottom corner and we can see that we've got expense claims. Now, the other thing that we're going to look at is to ensure that we have approved and paid and any expense claims that need to be paid. Maybe you don't need to pay them just yet if you don't want to pay them, but you do need to make sure that they are processed correctly and fully in Xero. So if you have staff that might be putting in expense claims, today's the day to ask them about ensuring that they lodge their expense claims before the end of the month if you want to put them in the end of the month. If not, they can do it obviously whenever they want. But if you're doing an end of financial year review, you want them to put them in on prior to 30 June so you can get everything up to date as soon as possible. And really, with Xero Touch and other things that help Xero stay up to date in real time, there's no reason why they can't be doing what you need them to do, because it's all in real time. So looking at the expense claims here, I've got one expense claim awaiting authorization. If we click on the word one awaiting authorization, we'll go into the claim. This is just a one automatically generated by the demo company. You can have a play in the demo company yourself and do this as well if you haven't used expense claims much. I can see I've got two expense claims here that were recently submitted that are awaiting review. I can have a look at them. Of course, if the person had uploaded a photo with the receipt, with their receipt thingy, the Xero Touch app or anything, I would be able to see that here at my end using the files button here, but there is no file related to this one. But if they had uploaded a file to this, I'd be able to see it here. So it just has all the information about the receipt. I'll just approve that because I'm happy with the coding, etc. And I can approve the other one without even looking at it if I want to, or you can click into it and approve it. Now I've got to record a payment due date and a reporting date. Of course, at the end of financial year, no matter what these dates are up the top here, the reporting date for these receipts is actually going to be whatever date you put here. So even if you were entering in these expense claims on the 1st of July, for example, the staff member didn't get it done, even if they would put the receipt date on this, but it might have date entered 1st of July, receipt date, 23rd of June or something, and it might have date entered 1st of July, but that's not important. The date that it's actually going to show up in the Xero file is this reporting date down here. This same concept works at the end of a BAS period. You might not have put all the receipts in for someone, or they might not have put them all in prior to the end of the BAS period, but as long as the receipt dates are prior to that, you can put in the reporting date. It doesn't physically stop you from putting the reporting date in if it's after, like if your reporting date's the 1st of October and your receipt date is the 1st of October and you want to put the reporting date as 30th of September to put it in the September BAS, it's not technically correct if the expense happened after the 30th of September, but Xero won't actually physically stop you from doing it. But that's just the difference, to understand that there is a receipt date that says this is the actual receipt date on the receipt, but the reporting date that it actually shows up in Xero is this date listed here. So we'll just leave it as the 29th. Payment due date, maybe we'll just say it's tomorrow because we're going to make sure they get paid today or tomorrow. So we authorize that expense claim. It's now sitting over here under awaiting payment. Have to go into it again. And now we can record how we're going to pay it. So maybe you're paying it through payroll. We'll say that, I don't think I've got an account. I can use the clearing account. So I'll just say dates paid today, or it's going to be paid tomorrow through, let's call it the clearing account. And we'll call it payroll reimbursement. All right, so that's the expense claims. So I've gone through, I would definitely be reconciling these bank transactions here. This is very important. But in preparing our file for end of financial year, we're reconciling these payments, we're checking our bank transactions, we're checking our accounts receivable, we're checking our accounts payable, we're checking our expense claims, and we're getting all of those particular things cleaned up. Now, once we've done that, what else do we need to have a look at? Well, as a non-accountant, and obviously I am an accountant, but if I was a non-accountant, the next thing I would be looking at that would make sense to me that doesn't use big words like trial balance and reconciliation reports and all sorts of other bigger words, I would be going to my profit and loss. So I would go to reports and profit and loss. Even as an accountant, this is what I do. I go through and look at things this way, not because I don't understand what a trial balance is, but just because I find there's a much more user-friendly way to get around Xero and to look at what I need to have a look at. There's no point running a trial balance if I look at this month by month and find a problem in the file because I can see that there's something weird happening in the Xero file that shouldn't particularly be happening. I can see that by looking at a P&L month by month very, very clearly, and I can quickly drill down into it. So I always look at the profit and loss, and then I look at the balance sheet, and then I run the accountant's reports after that once I've made sense of the profit and loss and the balance sheet and it all looks good. Now, when we look at the profit and loss, what are we looking at? We're looking at all of our last 4 months of this financial year and the year-to-date balance. You can also change your profit and loss to look at it over the entire year. So at the moment it's in common format, current and previous 3 months. If I want to look at the full financial year, I go to current financial year. So if I want to look at the current financial year, I've got June, and just give it a second down here, and I can look across at my other months. This is the Xero demo file, so there's actually nothing in here prior to these months that are here because it's the demo file and it resets and only shows a few recent months of transactions. That's why it's all empty. But if you're obviously looking at your file, you can look at the history and the pattern of what's happening with all of these transactions over a period of time. So because we don't have much data there, let's just flick back to current and previous 3 months. All right. And now we have all of our transactions here for the last 4 months where we can see a bit of a pattern going on. Well, not so much in March, but in these other months. In your real file, you should be able to see the pattern going across the 4 months. So when I talk about pattern, what am I talking about? Well, number one, when I first look at this, I can see that maybe the business has just started. We'll use this as an example. So there was a slow income in the start, then income has increased over time. We might ask the business owner if this is correct, that there was a drop in the income after that month, but especially if they're a startup, that's not uncommon. If I saw 17,000 made in May and nothing made in June, I might be starting to question things. But generally, I wouldn't worry about something as that fluctuation that's there. Here I've got some purchases. I might have a look at these purchases. I can see that this company doesn't usually purchase things, or at least they don't call it purchases. And too many times in my life have I seen people put all of their purchases to the purchases account or to the general expenses account because they don't put things to the expense accounts as accountants we would like you to put them to the correct category. I would check in here in this purchases account. If they're purchasing stock, then it's okay. If they're purchasing stock, that's generally what's the purchases account is used for, purchasing stock on hand or purchases that need to happen. in order to be able to make a sale. If you're dealing with selling products, buying and selling products mostly. So these purchases here, then it sits up under purchases. But let's say you're running a creative agency where you have purchased office chairs from Officeworks with their special end of year sale, and you needed those special ergonomic chairs, and then as a creative agency, you're going to put that to office equipment or to office furniture or most office expenses. You're not going to put it to purchases because it's not a piece of equipment that you're buying in order to make a sale. Although I'm sure you're much more creative with special chairs. Anyway, I'll get off that comment. My point is that is what we need to, that's the putting something to purchases is generally related to stock. It's not just for anything that you have purchased, which I've seen quite a few people do in the past. So I would look at that purchase and I'd go, all right, well, these guys are now selling golf balls, so they must be buying those golf balls as stock on hand to be able to sell. And that's fine with me. But you look for something that definitely look into something that had nothing in that particular account as yet, and look at why that's there. And if it makes sense as to why it's there, then all good. If it doesn't, then I would be reviewing it and asking the question. Again, I'm telling you what accountants are looking for when they're looking at this. So when you look at your own profit and loss, these are the things that you should be looking at yourself, but especially at this time of year before you send off your file to your accountant, because it will reduce the amount of questions they're going to have for you, because you're going to have looked through and already found things that are issues in your file because you're rushing off during the year and didn't do it properly, or things changed during the year and you need to change it around, whatever it might be. All right, so looking at these other expenses here, we can see there's a significant increase in advertising. I might have a little bit of a look at that, check what it is to make sure it's not a capital expense, something like that. Here we've got design prototypes for advertising material. Maybe that's okay if it's something that's going to be just a short marketing campaign. If it's something that is to do with branding, like overall branding of the entire business that's going to become intellectual property at a later point in time, that's something that you might want to talk to your accountant about as to whether you're allowed to claim all of that in one go, especially if it's a significant investment. Depends on how much you make as to what you consider is significant, but there's little things like that which the accountant might be looking for and question. So let's look through here. We've got bank fees. We've suddenly got this big jump in bank fees from $10.50 every month. So what's that? Is it interest? Is it credit card fees? Is it an annual fee? It looks like it is a account maintenance change fee, so that looks fine. We'll leave that there. I can look at it and see how quick and easy it is for me to drill down and look to things that look a bit strange, and see why it's changed so much, and I can clarify and make sure that I'm comfortable with that process. Now, we've got consulting and accounting, $49. It's probably the Xero subscription or something similar that's sitting there. We've got entertainment. I've got a credit here of entertainment and these other entertainment bills. I might have a look at see what that is as to how we end up with a credit of $181.50. We've got a party hire credit and we've got $18.50. Now I would be looking at this and thinking, well, why have I got a credit? Maybe that's income that we've charged for party hire or whatever it might be. I would just have a quick look and see what that is. It says refund bond for return of clean, $200 for entertainment. I would be looking at that and checking whether it should actually go to cleaning or whether it is against a entertainment charge. But if we look here at the entertainment charge, we might find, I don't know if they relate. No, here it is for $450. Here's the party hire for $450. And we can see that we've got refundable bond and we've got these glasses and things here, which is what we've hired. So this $200 is just the $200 coming back into the bank account 2 months later, and that's what's caused the credit. So straight away I can see that amount is fine. That's something an accountant would look at and go, well, what's going on there? And they can see straight away what's going on there through, like I just did, by doing the same. Here we've got freight and courier. It's a credit as well. It's got those brackets around it. Well, I'm thinking that that's actually a freight collected. It's actually a freight charge that's been put in an invoice. So let's have a look here. this is a sales invoice where we have sold golf balls to a client and there's a courier charge. Now that's been put to freight and courier expense, and that's why it's showing up as $9.09 or $10 including GST. But that should really have its own freight collected account, because otherwise it's not a freight charge for us, it's freight that we've collected on income. So let's just quickly edit that. And how did I know that that was a problem area? Because I had minus a $9.90 sitting in my account. So let's see here. I don't have a freight collected account, but I might be able to add one. Let's put it in here. And there we go, we've got freight collected, GST and income, and we can update that one. I can update it fully and easily right there because it is unpaid and I wasn't changing the amount. I could still change the account if I wanted to, even if it was paid, but I wouldn't be able to change anything else on here if it wasn't paid yet. So what I was going through there, Xero's having a think about what it's doing. Update. Seems to be hanging there. 1 second. All right, there we go. That's now updated. So if we look at our profit and loss again, here I can see I've got freight collected up here and my minus amount here is gone from my freight collected account. So these are the types of things that when you are looking at your business, your profit and loss, and you're trying to understand the finances of your business, of course, your profit and loss doesn't tell you everything there is to know about money coming in and out of your business. It tells you about your income coming into your business and your business expenses going out of your business, but it doesn't tell you about where other money comes into your business or what other, how much you actually owe people, how much other people owe you, how much you're paying out on car loans, credit cards, all those types of things. It doesn't tell you all of those things, but the balance sheet, which we're going to look at a little bit later, does give you a stronger idea of exactly where you're at with all of those other things. It's just showing your income and expenses. It's not showing you your physical cash flow, but you do need to, of course, have a profit to have a self-sustainable business with its own cash flow, that otherwise it's going to have to be funded by another source, either you putting money in or investors putting money in or a credit card or something like that. So when we look at this here, when you're looking at your profit and loss, whether you're doing it at the end of financial year or at another time, what you're looking for is to make sure that these numbers make sense to you. I know so many people don't even look at their profit and loss because they just look at it and think profit and loss and their eyes glaze over, like I just said the word tax to them, and they're not a tax accountant, so they don't get excited when they hear the word tax. So when you go through this process, think that your profit and loss is about you just understanding where some of the money is coming in, where the income is coming in, and where the expenses are going out. And if you look at these accounts and they don't make sense to you, they're going up and down quite a lot, they've got minus amounts in there, or you look at this general expenses and you go, oh, what is general expenses? And you have to have a look in there to see what it is. Then code those transactions to the correct category, first of all, so you don't have to chuck them all in general expenses, because general expenses means nothing, little pet peeve of mine. But you'd want to be able to look at all of these numbers and understand why they've changed, why they're going up and down, what's in there, why it's $568.04, why the rent is what rent is, whatever it is. You want to be able to look at it and see why those amounts are what they are. And you just click into them and it'll open up that list of transactions that relate to that amount for that month, and you can understand them. You can go back and move on. So that's what looking at your profit and loss is obviously all about, not just at the end of financial year, but now. All right, so I won't go into that any further into the profit and loss side of things because I've got 15 minutes left. I'm just going to check if there's any questions. Doesn't look like there's any questions there. Remember that you can ask any question about Xero or any of the add-ons that you want to. Let's have another look at what else we might look at the end of the financial year. Because this file, this hour today is not just focused on Australian users. I will mention that I won't go into wages and payroll in a lot of detail. What I would like to do is just tell you about a set of webinars which you may already know about, but I highly recommend that is that Xero is running at the moment, which is on end of year payroll. So I'm just finding it for you. Here it is. So there's a number of webinars that Xero is running at the moment. I'll send you the link, the hyperlink in the chat box, I think. Maybe I'll just So if you're an Australian Xero user, have a look at the payroll end of year webinars. Oh, it doesn't seem to put the link if I send it in there. I put it in the chat box, but let me see if I can do it. Oh, I think I can do it up here. I can't scroll down off my screen, off the live screen, as to what I can see, but I can write it in a post. So I'll just do that now. Okay, so I've just published the link to the below the video to the end of payroll end of year processing in Xero. It's worth having a look at that if you need to look at how to reconcile your payroll at the end of the financial year, log your payment summaries with the tax office and all of the other wonderful things you can do with Xero. I won't go through all of that because I know not everybody is Australian users. However, those webinars are certainly worth looking at to ensure that you cover what you need to cover. Now let's just have a final look at the balance sheet. And remember, this course today, or this lesson today, is all about preparing your Xero file for end of financial year. And when you look at your profit and loss and your balance sheet, they are the two core pieces of financial information about your business. I know there's a zillion other reports in here that you can use and that your accountants use and that everybody uses to, well, not everybody, but a lot of people, especially accountants, use to be able to understand your information. The activity statement is obviously another big one. We won't go into that now again, this is focused at covering a number of areas that use Xero, not just Australia. However, there's the activity statement. Will obviously you review that and make sure that's accurate as well, just as you would do with any BAS. But at the end of the financial year, you want to have a look at your balance sheet and check that everything makes sense. You've already looked at your profit and loss, check if that makes sense. The next most important place is you could have had everything that I've already looked at make complete and perfect sense, and then look at your account, your balance sheet, and you will see that there's still things in here that don't make sense to you. And of course, your accountant can help you through that process, but over time, you should ensure that you learn in your business how to ensure that all that information is reflected clearly inside your Xero file on a regular basis. There's absolutely no reason with Xero why you should have any errors or inaccuracies in your file. If you're trained correctly and if you know how to look for anomalies and things that may not be correct, then you should be able to look at this in your file and see at any point in time and be confident in your numbers because you understand what they mean and when they make sense and when they don't make sense. Because accountants can do that, and they should be able to teach you through the process of how to do that as well. And if there's something that you don't understand that you want explained, then ask your accountant that information. So many people sit there and walk out of an accountant meeting and go, oh, I didn't really get it, didn't really understand what they were saying, but you keep asking the questions until you get the answers, till it makes sense to you. So when we look at this balance sheet, the first thing that you're going to see is we've got our assets at the top and we've got our liabilities down the bottom. Now, in as simple accounting terms I can give you. The assets are generally things that you own. So they're things of value that you own. And the liabilities are things of, things that you owe other people. It might be the tax office that you owe other money to, or it might be yourself that you owe money to because you put money into the business. It might be things like that, but it's things that you owe, and assets are the things that you own. So own is, just to make clear, OWN, and liabilities are things that you owe. So when you look at this, you should be able to look at these numbers and think, well, what is it that I own here in these assets? Now we've got our business bank account. Now this has actually got brackets around it, which means that it's a minus, which means that it's in negative or overdraft. Now that is not actually correct at this point, because the only reason why it is a minus is because the bank information hasn't been reconciled yet. If I look on my dashboard here, I've got a statement balance, and my real balance when I look at it, I know is $4,242 in positive. The only reason why it's minus $6,000 is that I've got all of these transactions sitting in here that I haven't processed in Xero. Xero know that they exist because the statement balance is here. But in order for that information to be shown in my profit and loss and on my balance sheet correctly, which you need to do, is to reconcile these transactions here. So before you go through the process, I've mentioned this earlier in this hour, before you go the process of reviewing all of these other things, check your statement balance and reconcile all your transactions, so then you can do that. But make it a common practice of looking at your profit and loss in your balance sheet, and you'll be able to make sense of it in order to make an informed decisions for your business. So this business bank account here, I know you would straight away look at that and go, that doesn't look quite right. I don't have minus $6,000 in my bank account. I have $4,200 in my bank account. And the reason why is because you still have unreconciled transactions. So reconcile those and you should be fine. This one here, if we look at our bank account, I can see here that I've got minus $51.72 in this savings account. That, let's to pretend, is correct and matches our bank statement. Maybe an overdrawn fee came out of that savings account. And at this point in time, that's correct. You should be able to look at that and also look at your bank statement and have those same amounts. There's sometimes some anomalies I don't have time to go in as to why you would have those things there, but generally you should be able to look at these two things and see that they are the amounts that are in your bank account, and be confident that those numbers are reflected correctly. They are money and things that you own. The reason why this one's in brackets, so you actually owe the bank that money, but can still be confident that that's correct looking at that. Here, accounts receivable, we saw before that our total accounts receivable, which is all of the customer invoices that are awaiting payment, added up to $16,000.06. So that is money that we are owed. So it's money that other people owe us, not that we owe them, but other people owe us. So it's something that we own. It's a payment that we're expecting to get in the future. So that amount there, we know it already matches our accounts receivable because we clearly and looked through our awaiting payment and checked that amount totaled up to that, and we were happy that all of those invoices, there's I think it was 9 invoices or 10 invoices, we know what that 16,000 is made up of because we've done that. We've gone through and completed that process of checking that all those invoices were valid. The next, we've got the fixed assets. We've got these 3 fixed asset accounts. Now, this is generally something your accountants will do for you. This is all of the assets that you've bought in the past, office equipment and computer equipment, that you might have motor vehicles as well, or other plant and equipment, that these are the things that we need to depreciate over time. Depreciation, in its most simplified explanation, is the fact that you've bought an asset in the past and over time it loses value. Let's say you buy a car, it will lose value no matter what you do to it. So it will lose value, and then as it loses value, you get to claim as an expense the value over time as it depreciates. So here we've got this 825, for example, is the amount of this office equipment that has been claimed over a period of time. It might be a year, it might be 2 years or 3 years. But when you go and buy something, and I don't remember the exact tax laws anymore because I'm not a tax agent anymore and I don't keep up to date with it all. But whatever the expense is, it used to be $2,000. It was $6,000 for a while there. I don't know if it still is. But in Australia, if you spent $2,000, for example, or more than $2,000 on something, then you can't just claim $2,000 as a full tax deduction. It means that you have to claim a little bit each year over the lifetime of that asset. And the reason why that happens is, imagine if you could, for every $2,500 asset that you could buy, everybody that had money would just be going out and buying everything for $2,500 and claiming all of that as full tax deductions. But you can't do that. It's tax law. So again, don't quote me on those numbers, but that's the tax laws and things. That's what depreciation is all about, showing the value of your equipment, but also depreciating it over time, meaning that you can claim the cost of it over time to still get the tax deduction for what you need to do. All right, so the fixed assets here, all this information here can be driven quite simply and easily by the depreciation schedule that Xero has inside of it. So if you go to accounts and fixed assets, you've got the fixed assets, and mostly your accountant will do this. Your accountant can look at your fixed asset register and look at all your items that you have here and ensure that your assets are being depreciated and run depreciation on your file. I'm not going to go in and show how to do fixed assets now. If you don't really know much about fixed assets and you want me to teach on that in another Xero user hour, I could spend a whole Xero user hour talking all about fixed assets. So I might do that sometime soon if that's something that you're keen to look at. But here is the fixed assets register. Well, there's a couple of items here to be put on the register. There's the other items to go through. This is another thing that as an accountant they'll be doing at the end of the financial year. As I said, I won't go in and explain all that to you now. Might do it next week in Xero user hour if you're keen. Okay, so your accountant's going to look at your fixed assets. So this information here relates to our fixed assets that's on that fixed asset schedule. As I said, I'll probably do that next week for you, because I could spend a whole hour on fixed assets. All right, now below here we've got our liabilities list. I've got a few more minutes. I'll just explain a few of those things. On our liabilities list here, we've got our accounts payable. That matches up to the total number of bills that we owe people at this point in time. Remember, that was the amount that we saw when we looked at the awaiting payment list. Again, another reason why it's very important to check that your bills that you owe people are valid and correct, because that's going to show up here on your balance sheet. Here's our clearing account, the $48. That is actually the expense claim that I said I had paid that I haven't paid yet. If I was to go and pay that through payroll now, I would clear out my clearing account for that $48. If I was to pay it out of the bank account, then that amount's there. But right now, I physically still owe, well, me, $48 for the expense that was incurred that I need to pay back. So that is the expense claim owing. The GST, well, we're not going to have a full GST lesson today, but right now, according to this business, I've got $1,400 owing in GST to the tax office. Historical adjustment. If I see this amount here, I know straight away that my conversion balances are not correct, and I should never have this historical adjustment here if my conversion balances are correct. So if you didn't convert your Xero file yourself, go back to the person who did and work out why they're there, or speak to your accountant about helping you to get your correct opening balances and get rid of this historical adjustment. That's not something I can teach you in the few minutes that we have left, but that's what that historical adjustment is there is because the conversion balances in your Xero file is not balanced and it's not correct, and it should be. So find out why that is, speak to your accountant, highlight that to them, and they can fix that for you. Owner's funds introduced is just showing money that I've put into the business in the past, and this pay-as-you-go withholding payable is the money that I owe the tax office based on the taxes that I have sent out. So when I look through all of these files here, there's really only a couple of things that I know I need to do. We've got business bank account. I need to reconcile all those transactions because that's not what's actually in that account at this point. I've got my equipment, my computer equipment, my office equipment. I need my accountant to look at that to do the depreciation schedule, or you can watch my fixed asset training at a later time. And we've got the historical adjustments account that we need to look at. And assuming you've reconciled your payroll and your taxes and things using the Xero end of payroll year webinars that I've spoken about, then you should be able to be confident that you can send this file off to your accountant with a few notes of those things that you want them to specifically have a look at. But hopefully what I've done today is taken you through the things that you need to know in your Xero file that you need to look at before end of financial year or at the end of financial year if you can't get it done beforehand, before you send it off to your accountant, to be prepared for the fact that you have to do your financial year accounts anyway. And Xero certainly helps you do that, and hopefully taking you through that list and taking you through that process. Maybe you can watch back this video on YouTube or on live stream to go through and look at your file compared to this file and see and run through that same process and look at the things that I was looking for and find any anomalies in your file and fix them up before you send them off to your accountant. All right, if anybody has any questions, please send them through. If not, I'm going to jump off shortly, and I will see you next Xero User Hour at 1 p.m. Sydney time, next Xero User Hour, and I'll make that Xero User Hour training about fixed assets for you to build on what I started telling you about fixed assets today. Have a fantastic day, everybody, and if you need to get in touch with us, you can, of course, email us at hello@xumagazine.com, or you can get us on Twitter at XU Magazine, or you can contact me also directly through my channels. If you just go to jerrymurphy.com, you can find how to contact me there. Or leave a note under this live event here. You can always come back to this live stream and leave notes later on, and we will pick them up because we get emailed about them. All right. Thank you so much, everybody, for joining. Have a fantastic day, and I will see you all next week.